There's a lot of buzz right now around the 6,560 crore rupee Bajaj Housing Finance IPO. Focus on the group more so after a lot of brokerage notes are excited both about Bajaj Housing Finance and Bajaj Finance. The anchor book, of course, for Bajaj Housing Finance opens today, and it's expected a number of marquee investors will come in. But the story of Bajaj Housing Finance is a larger one, and of the group as well. In the last 20 years, Bajaj Finance has rewarded investors with 900x returns. To call this company a multi-bagger would be an understatement. The vision behind the group's expansion is also key. Chairman Sanjiv Bajaj has recently talked about how the group will be the financial life cycle partner to every Indian. To understand more on this, I'm speaking now with Sanjiv Bajaj. Mr. Bajaj, thank you so much for speaking with us here at the NDTV network. Great to have you on. At a time when the anchor book opens for the Bajaj Housing Finance IPO, we'll wait for those details to come in, but it's expected that a lot of marquee investors will come in and there's a lot of interest. Were you expecting this kind of a response?
Tamanna, I must say that while we were expecting and hoping for a good response, we've been overwhelmed by the response. End of the day, this is still a 7-year-old company. It's not a Bajaj Finance. It's not a Bajaj Finserv. I remember our early days of Bajaj Finserv and Bajaj Finance, where for the first 4 or 5 years, we were so below the radar, I don't think most investors even knew about us. And partly it is the capability and the success that the team and those companies have driven over the last decade and a half, which brings about this confidence for Bajaj Housing Finance for its upcoming IPO. Also places, as you can understand, the responsibility that the business must do well. It has done well in the last 7-8 years since we started doing housing in this company. And keeping in mind the huge opportunity that India offers us in the housing space, and the promotion that is happening even at the government level, we are very confident on our ability to continue doing that.
Yeah. Also, it's the first IPO in 30 years for the group. That makes it special as well. Just a bit about the timing, Mr. Bajaj. I mean, you've spoken a bit about this. There was RBI regulations in the backdrop as well, but why now? Why does it make sense now?
For two broad reasons. One, as Bajaj Housing Finance has grown in the last 7 years from a book that started at zero to 97,000 crore AUM at the end of the first quarter, the funding has come from its parent. It is 100% owned by Bajaj Finance, and hence it has looked to Bajaj Finance for funding, and yes, it has done very well. But given the size of the book now and the continued growth opportunities that we see in an Indian market where housing is expected to grow between 12 and 14% year on year for the next many years, we felt it was necessary to diversify those sources. In addition, we qualified as a upper layer NBFC as per RBI's regulation a couple of years ago. And there's a 3-year window within which we need to list the company, which is, of course, till September 25. So we do have a whole year ahead of us. But a combination of both these factors, diversifying our sources of capital, at the same time meeting RBI regulations and not waiting till the last minute to do that. This is what has been the driver in this upcoming IPO.
Is it also good timing considering the integration of HDFC and HDFC Bank? I mean, a lot of analysts talking about how there is a bit of gap in that market. Does that help? Does that work for you at all?
Well, that clearly has been a coincidence, and in many ways, it has been a positive driver for us. HDFC was the gold standard when it was standalone in the housing space. And yeah, they may have had a couple of years here or there, but over multiple decades, they've built a high quality business. What that also meant was that they were always first in line when it came to borrowing high quality from the market, or when the market looked at them as a bellwether for the future. That has opened up now. And I would be immodest in saying that that is us. But definitely, I believe that opportunity is there, whether on borrowing, just the access to a much wider borrowing revenue that we get because HDFC is now merged with the bank, and the opportunity to try and build if not the best, one of the top housing finance companies of this country in the coming decade.
How much time to the number one position, Mr. Bajaj? And yes, definitely not immodest. I mean, the growth trajectory in terms of, if you just look at the metrics of AUM, PAT, have been astonishing. So how much time to that number one position? And is that growth also sustainable right now with the kind of scenario in the housing market for Bajaj Housing Finance?
So as I mentioned, 12 to 14% growth for the housing finance industry looks very possible for the coming years. Our own intent is, given that the AUM is still small compared to some of our peers, and the huge opportunity. We are, after all, a national player. We are not a regional player. And we are building this business across all segments of home loans, of developer financing, of lease rental, discounting. Because one thing that we've learned from Bajaj Finance is building a diversified book allows you to diversify risk. It allows you to leverage on segments that are growing at a healthy pace, slow down where it's not. And we are here for the long run. So we believe that we have the chance to outpace industry growth like we have been doing in the coming years as well. And yeah, when it comes to number one, we want to be number one in customer mind. We want to be number one in customer choice. We want to make sure that our processes of engagement with the customer pre-sale, through sales, and service thereafter is as frictionless as possible. So we are right now going all guns and making sure we are number one in excellence, and size will follow.
Yeah. And when we talk about size, just to take that one point about the HDFC, comment further, and this is what a lot of people who are watching this space closely are saying, that could the group between Bajaj Finance, Bajaj Housing Finance also become the next HDFC. Now, this is coming at a time when the whole private BFSI space is facing a lot of macro challenges, deposit growth, etc. Do you see those conditions right for the kind of growth that is being expected out of you?
Very much so. And I myself said that we look up to HDFC. The context to that was, it's easy, well, I can't say it's easy, but it's easier to build a business for 5 years, 7 years, 10 years. But to do it decade after decade, to build excellence at a particular pace, which is higher than the sector, requires a lot of capabilities to come together, from your business strategy to your ability to raise money, which means how are you rewarding both your debt holders and your equity holders, to the quality of management, the ability to keep management with you motivated, aligned, and rewarded in the long term. This is what, as you can see, we've been doing at Bajaj Finance. And in that context, it is that same excellence over multiple decades that we hope to do with Bajaj Housing Finance as well.
No, clearly the big push for Bajaj Housing Finance is the management pedigree, and that's why the excitement on the street about it as well. But just a couple of more points on Bajaj Housing Finance before I get to the bigger picture, Mr. Bajaj. One is the kind of rise we've seen in the loan book. I already asked you if that's sustainable. You say yes, the opportunity is there. But what has been the strategy? Because it has been relatively quite rapid in the last 7 years. What has been sort of the differentiator compared to other peers?
Well, the main differentiators, I must say the single main differentiator is the ability to borrow. With the Bajaj brand name, we've been able to provide confidence to the market that we are a good quality borrower. And if you see most of our peers, many of them run good quality businesses, but their size is getting capped because they are running out of borrowing options. And that's where both the capital that was available from Bajaj Finance, as well as the ability to raise a large debt book from a large set of lenders to us, for Bajaj Housing Finance to have the highest credit ratings, domestic credit ratings, has been a tailwind as well. And of course, the other side of it is the responsibility to build a good quality asset book. And here the diversification strategy that I talked about earlier, where while 60% of our business by regulation has to be home loans, but the rest of it, how are we balancing to ensure that we are supporting developers, we are supporting other constituents, We're supporting people who are buying large office spaces and then want to do lease rental discounting. How do we continue to build those relationships with each of those constituents so that we go from one project to another as a fair partner with them? And finally, with our end customers, offering an experience which at least our attempt is to be significantly better, blending what we can in the digital space. And we understand that when you're taking a home loan, the digital capabilities that we need to offer are different than when you're taking a loan for a mobile phone or a television, which is a 30-second approval and probably a purchase in less than an hour. Keeping those differences in mind, we still believe that our entire process, which is a combination of physical and digital in the case of home loans, is industry leading today. A lot of effort, a lot of technology, a lot of data and analytics has gone into that, and we continue to invest in this space. So combination of this, we hope, will position this company well in the future also.
So the only few headwinds that I can see, perhaps one is keeping up the asset quality or the level of asset quality, and the other maybe is regulatory challenges. I mean, that's one that no one knows clearly what will happen. But let me come to the first point, because the asset quality has been a big thumbs up. How do you sustain that?
By doing the same thing that we do year after year, that our asset quality has been built up with assets built over 7 years. It's not a small amount, as you know, just shy of 100,000 crores as of June 2024, larger than almost every other player other than one or two out in the market. So it is with a lot of granular focus on what's happening in micro markets, very active choice in which developers we work with, what is their quality, what are their leverage levels. At the same time, with borrowers that come into the LRD space, and even our granular understanding of individual consumer risk, which comes from the pedigree of having worked for most of the team members, having worked over 10, 15 years in Bajaj Finance. So it's a combination of these things, but I must be also careful to say that this is not static. The situation changes every day on the ground. It can change depending on how the economy is doing. It can change, yes, with respect to regulations. So we see that as we are building our business, if there is any regulatory arbitrage, we avoid building a business on that because we know those regulations can change. So voluntarily, we build a solid book. We keep a liquidity buffer ourselves for unforeseen short-term events so that we build a steady, stable, good quality book and thereby then a good quality business.
But as careful as you have been, and most large companies have been, regulatory risks still remain. And you know, we've seen them in the past as well in various arenas, and some with Bajaj Finance as well. And then you've gone back to the drawing board and fixed things which needed to be fixed. Just in the space right now, how big a concern is regulatory risk?
You know, I would not call it regulatory risk. Regulatory risk is when overall regulations change, you get blindsided and don't have enough time to comply with it. So, for example, in the last 10 years, regulations for NBFCs have got tighter and closer to banks, at least the large NBFCs. You could call that regulatory risk. In our case, as I said, we never looked at arbitraging on that, so it did not impact us. It may have impacted others. But yes, what we are seeing is that the regulator, their scrutiny on the large NBFCs, including HFCs, has increased. We think this only strengthens the entire ecosystem. And we look at it proactively and positively. As we are growing, we're getting larger, we're getting more important to the entire lending ecosystem. There is a greater responsibility to ensure that we minimize any fallout of unintended lack of controls, missing controls as we are growing. That by itself should not be a reason for fault lines to appear. And while we don't live in a perfect world, we understand that, but we are very conscious to proactively ensure that our foundations get stronger and stronger as we are building out our business. Once in a while, gaps do happen. The regulators, through their inspection, identifies that. asks us to correct it, and we go ahead and do that. But our intent is how can we keep proactively evaluating and improving ourselves so that theoretically we don't need the regulator to come and tell us that there are gaps. I think it has just made us much stronger as a set of businesses. And some of that pain is a pain that you have to endure as you're getting bigger and better, because none of us are perfect. So there will be gaps, but how quickly you address those gaps and how positively you take that is what differentiates the better companies from the rest.
Yeah. Is one of those lessons also perhaps on credit screening and the quality of credit screening? And this is not just in context of Bajaj Housing Finance, of course, but even for smaller ticket size loans. That's been something that the industry has had to go back to, right? Even as more and more Indians want to buy the latest gadget in a few minutes without perhaps having the money to afford it right now.
So there will be different types of lenders who will use different strategies to build their business. And some of those strategies are higher risk, higher return strategies. Some of those strategies will use different surrogates for income. And each one has to see that as long as it's working for them, you're building a good quality business, then that's fine. Otherwise, you have to fine-tune your strategy. For us, the large number of customers we deal with, the access that we have to their information with their own consent, this allows us at a very granular level for an individual customer to assess their individual risk. On that basis, we take our credit calls, we decide what ticket size for a particular loan, what's an overall level of exposure, because a large number of our customers have multiple loans from us. We also monitor what are their loans in the market through the credit bureaus, whatever information is by regulation allowed to be shared. And by doing this at a granular level, it has helped us so far look out when we saw, for example, 5 quarters ago in Bajaj Finance, we saw that small ticket unsecured lending, that business in the market was showing little higher delinquencies, and we slowed down our exposure to that segment. So the ability to be able to do that, and because we run a large diversified book, the flexibility that we have to do that, at least in our case, helps us with keeping our quality of business as good as the growth in top line.
Just absolutely last question, Mr. Bajaj, and the reason I wanted to hear your view on this is because right now we have the conversation about a rural recovery, and we're seeing this in different segments that we talk to every day in different consumption segments. From the credit point of view, are you seeing those signs of rural recovery?
We are clearly seeing in the last 2 quarters better rural demand, and rural quality, again, other than on the small ticket personal loans, had been reasonably steady even in the last 2 years. Demand had slowed down a little bit, and we're seeing a recovery on that. Small recovery at this stage. Even when I talk to people in the FMCG space, I'm hearing the same thing from them. And we're very hopeful that with the current rains, which by and large overall has been quite positive, that this should continue.
Okay, thank you so much for speaking with us. Sanjiv Bajaj there talking about Bajaj Housing Finance. And, we'll wait and see. This is definitely one of the anticipated IPOs this season in a year where you have pretty big IPOs hitting the market. Thank you so much once again for speaking with us.